morning, treasurers. This is your host, Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippet. In the international market, long-term US Treasury yields shot higher and the yield curve steepened on Tuesday as the market awaited the outcome of Georgia elections that will determine which party controls the US Senate. On the economic data side, US manufacturing activity rose in December to its highest level since 2018 August. The ISM index reading was at 60.7 last month, up from 57.5 in November. With discounting Democratic win in Georgia and better ISM index reading, US 10-year up 3 basis points closing at 0.96 percentage points and 30-year up 4 basis points closing at 1.70 percentage points on Tuesday. In the crude oil market, for the week ending December 25th, Energy Information Administration reported an oil inventory draw of 6.1 million barrels. This was unexpected. After another round of drama and a stalling of the talks on Monday, the Tuesday extension of the OPEC Plus meeting concluded at long last with a solution upon which all OPEC Plus members agreed. Tuesday's meeting saw the groups agree to lift oil production by 75,000 barrels per day instead of widely expected 500,000 barrels per day over January levels. But the big brother Saudi Arabia declared on a positive side that it would voluntarily cut an additional 1 million barrels per day in February as well as in March above its current quota, while the other OPEC Plus nations will get to increase their production by 75,000 barrels per day for February. With Saudi's voluntarily announcement of 1 million barrels per day production cut for February and March, crude rallied for 5 percentage points and is now at $53.89 per barrel. Crude's short-term range seems to be 52 to 55 now. Knight Research already has $60 per barrel target for crude by June 2021. In the currency market, dollar index is at 89.57. DXY's today's range seems to be at 88.84 to 90.24. USD CNY or Chinese yuan is at 6.46. USD INR with a low of 73.02 closed at 73.17 on Tuesday. USD INR's range for today seems to be 73 to 73.30. It seems the 73 level is guarded once again, but the US election results can change the view. At present counting, Republicans are ahead, but the market is expecting Democratic win. If Democrats control the Senate, expect DXY at 88 and USD INR at 72.70. Whereas if Republicans control the Senate, expect DXY bouncing back above 90 levels and USD INR at 73.50. In the domestic market positivity continued on Tuesday as well, with continuous MF and foreign banks buying. Mutual funds shorter end of the curve was the preferred location to park money. 522 GS 2025 closed at 497 versus 5% the previous day. 577 GS 2030 closed at 585 versus 586 the previous day. 3 reasons for the recent rally. Number 1, fresh purchases by the foreign banks as they reposition their books starting from January 2021. Number 2, increased inflows to mutual funds, which in turn are buying shorter end of the curve. And number 3, inflation data for December 2020 to be published on 12th January 2021 is expected to cool off inflation and give RBI a hope to prolong their accommodative stance. Rate cut expectations are still 0. Yesterday, foreign banks bought approximately rupees 1,500 crore and mutual funds bought 2,135 crore as per CCIL data. We expect this positivity to continue for a few more days, but do not expect a drastic fall in yields from here. Yesterday, private sector banks sold rupees 2,686 crore worth of GSEC. Hence, public and private sector banks are selling, whereas mutual funds and foreign banks are buying. 5th January 2020 SDL auction analysis. If we do that, 10-year cutoffs are as follows. Tamil Nadu at 653, Goa at 658, Rajasthan at 659, UP and Uttarakhand at 660, Manipur at 663. Knight Research had advised UP and UK, which is Uttarakhand, at 659-660 levels, and we will try to offload them with a secondary market with 2 basis points profit target. Please note that even though there is a fall in yields in GSEC and GSEC, SDL yields are still at the same level. effectively increasing the SDL versus GSEC spreads. Markets to remain muted today, and next action will depend on tomorrow's 6/19/2034 Operation Twist cutoffs. Night research will be available with T-bill cutoffs today, which are expected to be higher due to increased year-end demand. That's it for today. You are listening to Night Snippets with Parthesh Shah, co-founder of Fintech. See you tomorrow with the new episode of Night Snippets.